The lower than expected US retail inflation data, coupled with the weakening of the US dollar, lifted benchmark indices 2% last Friday. The welcome news rekindled hopes that the US Federal Reserve may tone down its ultra-hawkish monetary policy stance. The S&P BSE Sensex eventually ended at 61,795, up 1.4% for the week. The NSE Nifty 50 topped the 18,300 level and gained 1.3%. However, the BSE mid-cap and small-cap indices settled with losses, down 0.7% and 0.4% respectively. According to VK Vijay Kumar of Geojit Financial Services, it is probable that the US Fed might pause after one more hike of 50 basis points, which will be an advantage for the bulls in the near term. New record on the Nifty 50 is only a question of when. Meanwhile, Amit Jain of Ashika Global believes the frontline indices could hit new lifetime highs in November itself.
I wish to assure each Indian investor that by next week or by end of November 2022, Indian market will touch a new lifetime high. So I am sharing 5 factors which make me believe so. Number 1, post COVID-19, world was following China plus one policy, and now there is a murmuring in global market about Europe plus one policy, which will immensely benefit Indian economy and stock market in this ongoing decade of 2030. Number 2, since its bull run in 2004, Indian market never had a fundamental correction. It always had a technical correction due to lack of domestic money inflow into equities. But now, on the contrary, in year 2022, there is enough inflow of domestic money in Indian market. If we take a rough estimate, then there is a surplus liquidity of almost 1 lakh crore by domestic institutions, which is sitting on sideline to get invested into Indian markets. Number 3, in my view, Russia-Ukraine war is in the last leg of its conclusive move by end of this year. Number 4, the yesterday's US inflation number at 7.7% has been a pleasant surprise for global markets, which may pause propensity of Fed rate hike going forward. And number 5, till now, INR has outperformed all leading currencies in the world like GBP, Euro and Japanese Yen in YTD performance. And this trend may continue, which will boost FII confidence in Indian market.
However, 18,300 appears to be the immediate hurdle for the Nifty as per tech charts.
So basically now Nifty is around, right now it's around 18,300, so it's only a 200 point away, so less than 2%. So yes, eventually it will, I think Nifty will make an all-time high and go beyond. But the moment speed will be slow, that's what I'm expecting, because though global markets are doing well right now, we were outperforming till now. So now, although Asian markets are up by 3% at least, 2.5 to 3%, we are up by only 1.5% because we are already outperforming. And now the result season is at the fag end of the fag end. I am not expecting any momentum in our market. It will move up, but slowly and gradually. So as of now, 18,350 is the immediate resistance for the Nifty. I think if we were to cross, once we able to cross that level, we are headed towards new high. And 17,900 should be the stop loss for trading long.
Focus shall be on India's October inflation data this week, which will be released on Monday. That apart, Q2 earnings shall draw to a close. In the primary market, Kaynes Technology IPO will close on Monday, while subscription for Inox Green Energy shall end on Tuesday. Fusion Microfinance, Bikaji Food International and Global Health are expected to debut on the bourses this week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.